Hello again, everybody. Dwayne here from DRFX Forex Swing Trading. Now, let me take a look at the situation on the US Canadian dollar to determine where we expect this pair to move over the next couple of days, as well as over the next couple of weeks. Now, as you can see here from the daily chart, we are now pretty much in the closing stages of completing this pennant setup. The resistance boundary has already been formed, and we just need this second support point to be completed to form the support boundary and complete the pennant setup. Once completed, the pair will either break this resistance boundary to resume the major uptrend that I'll take a look at in a little while, or head further below this broken trend line and carry us towards one of these major outer uptrend lines. So the question, based on what we're seeing here, is whether or not the market is actually going to continue bullish in the direction of this major uptrend, or if we're actually going to see the market pull back towards this trend line. One of the answers, or the answer to that question, could actually come from what we're seeing here, which took place over 6 years ago. As you can see here, the market has now hit a major resistance boundary that was formed in March of 2009. This was formed at the 130.64 price point, which is where the market has rallied to this year. Now, whenever major resistance points or support points such as these are hit, the market generally pulls back significantly, or at least moves sideways for a very long time, such as what we're seeing here on this pair. When following that period of sideways movement or pullback, the market will either continue in the direction of the trend, or significantly pull back to possibly start a new trend direction. So this is what is possible on this pair based on the fact that we have hit this major resistance point. So with that in mind, there's actually a very, well, it explains the sideways movement and the pattern of this pennant that now appears to be formed. And based on what we're seeing, the market will either respond by continuing in the direction of the pair, or pull back significantly to at least hit this trend line, if not go further along in favor of the Canadian dollar to possibly start a new downtrend. So that is always a possibility whenever the market hits these major resistance boundaries that have been formed several over several over over a number of years, several years ago. So over the next couple of days, once this pennant is completed, the market will either break the support point, break the support point here, or break the resistance. In breaking the resistance, the market has to give a strong signal. This will give us the added confidence that the market is in fact going to be headed higher, instead of giving us as opposed to giving us a weak signal that ultimately leads to a sharp U-turn bearish that takes out our stop loss and head towards one of these uptrend lines, outer uptrend lines. So the key in terms of trading this in the direction of the current trend is to ensure that the signal given is a very strong one, and placing our stop loss at the right area on the 4-hour chart. So we're going to be looking for that trade over the next couple of days. My preference is always to continue in the direction of the major trend, especially in this case, since the setup that we're seeing here doesn't appear to be strong enough to justify a major trend change in favor of the Canadian dollar. So as it is right now, this setup is strong enough to continue the uptrend, and even if we see a temporary move below this area here, it could actually eventually lead to a U-turn that produces bullish signals to indicate the continuation of the uptrend as well. So we could actually see the market either break the resistance boundary at this area here, or U-turn following a temporary pullback to provide us with another entry signal at this area here without even hitting these major uptrend lines. So those are the two possibilities in terms of the continuation of the uptrend. In terms of a bearish scenario, I would want to see a stronger setup than the one that we have here. The first possibility is for the market to actually form a head and shoulders pattern. Here we see that the left tip of such a possibility would be considered to be already formed at this area here, with the center tip now being formed with this pennant setup. If we see the market pull back lower here and then rally once more and then form the right tip in the form of a pennant setup such as this, then we could be on the verge of seeing the market start a reversal in favor of the Canadian dollar that takes us possibly below these major uptrend lines. So that is what I would look for first of all before considering the bearish possibility. So right now the preference is for the market to continue bullish with either direct break of this consolidation setup or a sharp U-turn to following a temporary break below this area here that would effectively render it a false breakout and provide us with a bull candle or bull signal to head higher. So let's wait for a couple of days and see what the market produces for us. But my preference is for a bullish signal either here or below the consolidation.